And yeah, man, ask away. Can you talk about not needing a strength switch at reversal? So you don't need a strength switch at reversal necessarily, right? So especially if markets are more so correlated. So um, this is what I do, right? So I don't require a strength switch at every reversal, but it is ideal. And if you're newer, I would just demand it. Okay, like is it gonna happen at every reversal? No, it's not. No, it's not going to happen at every reversal, but you don't need to catch every reversal. Those will be the highest probable reversals. But if you just have a regular two-stage Kraken correlation, so majority of the time it's going to be in the version of this. It's going to be SMT and then PSP, right? Like this. So you're going to wait for the candle closure. This is my favorite type of two-stage SMT. It's just going to be SMT with the higher low and then close PSP closure because you're waiting for a candle 2 to close basically, and then you're trading candle 3. So naturally, it's just a little bit higher probable. But if there's no strength switcher, I like to demand all three markets to show a lower time frame reversal signature. So if they all V-shape, you're typically good. You don't need a strength switch typically. Because if they're all reversing, that's the whole point, right? That's what you want. That's how I would approach it. How do you use the 90-minute time frame? Okay, so this is something I haven't really went into too much, but it's really the time trade. So just like any candle, where if we have a large wick, for example, it's not likely to reverse or expand. Maybe that candle, maybe that time window of this 90 minutes, maybe it does hit a key level and has SMT. But if the 90-minute wick is very large, then it's not likely to reverse and expand. It can reverse, but it can't expand. You know what I'm saying? So this time window would be more so viewed as a manipulation, not manipulation into expansion. This would happen in Q3. Like Q3 would then expand. So you're just going off wick size. It's literally the same thing. So if you look at maybe over here, right? If we don't have SMT here, by the way, but if we had SMT here, you see this large wick. You would just want to time the 10 a.m. reversal. This is a 10 a.m. reversal, technically, or 10 a.m. expansion, pretty much. You would time this 10 a.m. expansion basically with the 9 a.m. 90-minute close, right? Because basically this 9 a.m. 90-minute candle, the time window runs from 9 a.m. to 10:30. So you just want to wait for basically 30 minutes to pass, and you have that 90-minute open aligned within that 10 a.m. 4-hour time window. If that makes sense, okay? So 10:30 is when you trade this. Does that kind of make sense? Just like if, for example, let's say there is. Let's actually go to one that. Let's go to this one or something. All right, this might be a good one. Yeah, this is pretty much a good one, I would say. Hold on. 10:30. Yeah, this is a decent one. So if you look here, let's just say there's an SMT here. I actually think there is. It's just I wouldn't actually. I didn't actually trade this lower because it's just a feather swing. But we're just gonna go off of this, right? So, for example, this 90 minutes, 9 a.m. time window. As you see, look at that large wick, right? Let's say it trades into a high or something, has SMT. This candle is not going to expand. Like this 90-minute time window is going to expand. The expansion will happen at 10:30. Does that make sense? So within that, basically that 10 a.m. candle, the real expansion is going to happen at 10:30. Okay, so you just want to time it with that. That's typically how we use it. You can see right here, right? This 12 o'clock candle, whatnot. When does that happen? The new 90-minute open. It's pretty useful, man. It's pretty nice. Where's some good examples of this? This would be a good example, looks like. Just need to see if there's any type of... So there's no type of SMT here, though. Yeah, you see this 10 a.m. reversal? A lot of times within the 10 a.m. reversal, you want to time it with the 90-minute. So you can see that this candle here, right? There's going to be a time window, so 10 o'clock pretty much opens like right here. in order to trade this, basically this 10 AM reversal, you basically just want to wait for 10:30, right? Because this 9 AM candle is too large. The wick size is like too large. And it also kind of went higher first and then went lower. So it's not going to go higher, lower, and then higher in the same candle. So you just want to wait for the next candle. It's really simple. It's nothing like crazy, dude. It's really simple. When do you enter from first CST versus waiting for order block? Isn't it better to enter a first CST stop? Yeah, exactly. I actually prefer to enter on the first CSD. Here's why. A lot of it is to do with management and your stop loss, yeah, being in the actual true protected level. So if the first initial reversal isn't like the cleanest, you know, maybe it doesn't really V shape or something or doesn't create gaps, that's when you probably want to wait for another CSD. Or if just the overall narrative is just not that clean or something, you're probably waiting for a little bit more confirmation. Or just trade the universal sequence, like wait for displacement away with a gap on the 15-minute or above, and trade that. But if everything is good, bro, like in my opinion, everything that we wait for prior is enough confirmation. Like the V-shape on lower time frame and everything before it is enough confirmation. Another CSD isn't gonna like do much for you. It's not really like confirming it, you know. If we're gonna reverse, dude, it's gonna happen right here, you know. Like everything we wait for is already enough, you know. So I ideally like to just market execute on the initial CSD, or just enter off the first gap. And here's why I love to do this. So this is a little bit about my trade management. I think I did a video on my channel about this. Maybe it was in Lens. I don't know if I shared it with you guys, but this is how I essentially do it. So the reason why I like to put my stop loss here is because, yes, this is the protected level. Any type of CSD up here is not necessarily protected, bro. Like, price can do this, CSD, and then easily just retrace in this overall range and then go, you know? Or especially the higher and higher you go, the less protected your stop loss is, if that makes sense. And the reason why I like to enter on the first CT is because I can manage extremely quick, right? Literally all I need to do all I need price to do basically to trim my stop loss or go break even is pretty much just retrace back into the CSD or gap and then expand away. That's all I need, because then I can move my stop loss from right here. Typically I put it at the body, usually, and then I can just move it to here. This is what most people enter on anyways, right? This is what they deem to be protected anyways. So it's when you trail your stop here. So you basically, a lot of times you're cutting your whole stop loss in half or more, right? So my losses are a lot of my losses are not full losses. If it's a full loss, typically it's just straight up fails. I don't get this reaction here, but that's literally all I need for price to do. I can move my stop here, and then when it's necessary, I can go break even. So when you can go break even is typically when you are limiting an order, right? So if I actually limit order, like an order block, you get a way better fill. Whoops. So let's say I limit right here, price retraces or something, and then it goes like that. Then I can move my stop loss, you know, either break even or like very, very close to it. Because basically the propulsion block low is just deeper in the range, or my entry is, sorry. But yeah, does that kind of make sense on why I like to do that? And I can go break even quicker. It's logical too to go break even there, because we're not expecting price to, especially super low in the range, bro. We don't expect it, like, price to return here. You know, we're expecting a very large displacement from this area. That's how true expansions happen. They don't come back like this. They're not supposed to come back like this, really. You know, so your stop loss being, you know, down here is absolutely fine. Like trailing very early, like literally sometimes I trail and it's like sometimes like 1R, dude. Like I'm only up like 1R and I can trail or trim my stop loss. Like it's really good in my opinion. Like if you guys adopt that approach to management, I think it can help you guys a lot. Cause I see a lot of people, they will take losses when it's absolutely not necessary, or they could take like partial losses like super easily, or even break evens. Like it's a big thing. For example, like let's say you're first CSD entry or something, price retraces, like they'll be in this position or something. I think stop placements as well. Like sometimes it bites me in the ass when I put my stop loss at the body. Most of the time it doesn't though. I like to put my stop loss at the body. It depends how big the wick is though. If like wick is like half the size of the range, I cannot do that. I'll put it like EQ of the wick or something. I'll do a video on that, but on stop placement. But yeah, some people take losses where like it's prices like this or something. Maybe it doesn't go 2R, but dude, there is no reason for price to come all the way down here. Like it's not gonna do that. I mean, it's gonna do it like sometimes, bro. Like I'm not gonna say it's impossible for price to do this and then go back higher because it can do that, but majority of the time, dude, it's not gonna do that. You know, in a clean expansion market, it's not gonna do that. You know, I don't want to be in price that does this shit, like retraces all the way to get back here and stuff. I really don't want to be in price action that does that. You know, so you can absolutely be breaking at this point. You know, it takes there's mechanical ways to do it, like 2R. But even like, let's say it goes like 1.5R, like, dude, your stop loss should be here, bro. It's not gonna do this more times than not. It's not gonna sweep you out and then go. It's very unlikely to do that. So that's just my opinion. That's how I do it to try it. Like this is maybe this is an example. Let's like use some old PA or something. Is there like, hold on. This is a great example, honestly. Let's say you enter this first fair value gap. Right. You can put a stop loss probably like you don't have to put it up here, bro. Like I mean, this can be a good area. Maybe like half that distance, like around there, bro. It's fine. And then obviously maybe you're TPing down here or something, right? Also, I like this entry first CC because you get more RR as well. Like my wins, my average RRs, like y'all's average RR when you're holding to TPs, I think it's very good to hold to the actual targets. You can partial along the way, of course. I think it's really important to hold y'all's trades, man. I did take a lot of break evens this week, but I don't usually take that many break evens. It does suck, when your trade goes 3R back to break even or something. But in the long term, like when you have a higher average RR, losses do not affect you, dude. Like, because these large trades, they can make up like 5, losses in a row, And remember, the way we manage here, we're very aggressive with our management. So even our losses are not as big. So most of your losses are partial losses because of what we're doing here. We're only demanding price to do this, literally. Exactly this is what I'm talking about. And then you move your stop here. That's all we're demanding. And you're taking partial losses, right? But your winners are huge, right? They're like 4 or 5 RR, average RR, right? Majority of you guys probably like 3 to 4 R should be like your average RR probably, right? And then at that point, you don't need a high win rate, 40, 50%. Literally, guys, you can make so much money with like a 40, 50% win rate. It's crazy. But all right, our stop loss, let's just go with this, bro. We'll just keep it simple, right? This is our stop loss, right? When price CSD's here, this is what most people enter on right here. That's what most people enter on. So right there, when you get to close, you can move your stop here. So you go from 116 points or whatnot to now what? 17. And arguably, you could probably move your stop here, to be honest, because is price really going to do this? Take this high out and then go without taking this high out? Probably not, dude. So you can go break even, probably right there, right? You know what I'm saying? So you can go break even very early. Like how much R are we up right here? 0.9 R. But mechanically and logically, you can go break even, dude. Does that make sense? And I think this will save a lot of y'all's asses, like honestly. And sometimes it will come up here and take you out, but dude, that's a part of the game. You know what I'm saying? This is just a 15-minute fair value gap that price came into. This is probably a good example too, right? We'll probably use like, hold on, let me go to like, yeah, this is probably a good example. Let's say there's a universal sequence in this gap. Let's just pretend that there was, right? So you have everything good, SMT fill, blah, 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 right? This is technically protected area. This high is the protected area within the lower time frame distribution, right? Because you have a reversal here, lower time frame expansion, lower time frame retracement. What are lower time frame protected highs in continuation? It's from 15-minute and above fair value gaps, right? This is just a lower time frame. This is literally a 5-minute retracement, right? But it's protected because it hits a higher time frame PD array, right? That's the universal sequence like logic, you know? So we can use the 1 minute because it's like 15-minute PD array. So we can go to the 1 minute. So you guys can, you know, you want the V shape here. You all see the V shape, that's good. So we can enter the first CST, right? Put your stop loss up there. This is what I mean. This is all you need. This is all you need price to do. Retrace to fill you in, right? Once it expands away, brother, you are break even. Price only went 1R. You're not, maybe not break even, but you're right here. Your stop loss is right here. Makes sense? That's how I do it. That's how I do it. If you're asking me, you can partial like that. So yeah, like you're losing. Your losers are not even gonna be crazy. I cannot get to all these. Holy. When are you starting your own mentorship? Somewhere in between the range of Q2 and 3. Somewhere. I don't have exact date right now. How do you know which gap to use in an expansion leg? Okay, so let's go over like I do have some. This is my Acid Sync Part 2 slides, guys. They're almost done. They're almost done. But I do have some slides on this. I was gonna create a video on gap selection. We can go over it, some of it really quick. Okay. So universal sequence gap selection. So for 30-minute and above, so basically we're always gonna be in a universal model. Okay, what is a universal model? Like a higher time from key level into a higher time from draw liquidity. Okay, that you have to have that, bro. You have to have that. So you know, internal to external, you know, ERL, IRL, or order paying ranges on the hourly or above for framing the low of the day, for continuation 15-minute above. But this here is specifically usually talking about usually the low of day, like 1 hour and above, because that's going to give you a reversal and a target, right? And that's basically like why it would be like the intraday, you know. Why would it be higher temperament really? Is because this is where people like long the high of day, for example, on like a 15-minute gap. Like, does that make sense? I'm kind of bad at explaining this, kind of trying to explain this, but probably a horrible explanation. But really, you just mark out the whole range, right? From reversal low to drawn liquidity high. You mark that out, okay? And here's one way to go about it, okay? So in the discount of that range, you're going to use a 15-minute gap, right? Once price crosses the premium end of that range or enters EQ and above, you're going to use a 1 hour or 30-minute gap, okay? That's one way to go about it. There's other ways. So another way to go about it is when price engages with the first relevant level, right, on its way to the overall drawn liquidity. We're not expecting price to reverse at any sort of internal level. These are all internal levels, right? They should not be reversing price necessarily. We want them to basically get traded into and then basically just to print a new phase of price, so a lower time for retracement or consolidation to expand again. So we're looking for these areas to, you know, fail to manipulate to continue to our overall draw liquidity, right? Because this is the higher time frame draw. You know, we're coming out of a higher time frame key level. All this stuff is internal, right? This is just the retracements, basically on the higher time frame, right? So we don't care about all this stuff. But yeah, when price engages with this level, this is when we expect a new phase of price, right? Or after we hit, basically, if we're not in a swing point, you know, like a candle 3 or 4, typically when you want to demand a 30-minute or 1 hour gap, because at least you'll be trading a candle 2 at the very least. For example, let's say we print a gap here on the hourly or 30-minute, right? And then maybe we get, let me draw this a little bit better actually. Like, let's call this bearish candle actually. Bearish candle. This is what I'm trying to say here. So right now we're not in any swing formation, right? We're kind of just in expansion. So if we then have an SMT fill like this, at least we'll have a candle 2 that we're trading on the hourly or above, right? Or 30-minute above, sorry. If I'm just using a 15-minute gap here, for example, let's say this is candle 5, but there's just a 15-minute gap here. I'm just longing basically the hourly chart. I'm basically just like long the high of day, like really high in the range. Does that make sense? So you always want to be ideally within a, 30-minute or above like swing formation, you know? What else do I have up in here? This stuff is not all the way done. Here's an example of the universal sequence. So this is the main reason I had to create this, because a lot of people would basically trade a candle 3. This is what T-Trade's had a problem with too. He teaches like not to trade candle 3 if candle 2 expands like this. You see how it kind of expands? Because you're basically longing lower time frame, like high in a range, which you don't want to do. So typically when candle 2 expands on the 30-minute or hourly, it's going to create a 15-minute gap, and that's the universal sequence, right? 15-minute gap or above. But that's really just creating the low of a candle 3 if you think about it, right? So you're still trading the fractal model, but we're waiting for the lower time frame to enter a relevant area, to create a more protected level. That's pretty much what this talks about here, right? You're not gonna fall for these little order blocks way high in a range. I'm not sure what all these are. I don't know. These slides are like old, dude. I was gonna do this a long time ago. Here is an example though. This is pretty good example of why we have to wait for sometimes you don't want to wait for like a 15-minute high in a range, because what you don't realize, let's say you enter the 15-minute SMT fill high in a range, for example, what you don't realize is when this closes, it's just going to create a higher time frame gap, basically. So basically, your stop loss would just be on a higher time frame gap high. Does that make sense to everyone? We'll go into depth on this. Bro, when I take continuation, it reverses. What type of continuation you're trading? Like universal sequence or like lower time frame continuation? Maybe you're entering like too high in a range. I'm not sure. I'm gonna catch up here. Am I like behind right now? Oh, I'm like 10 minutes behind, dude. I can't get to everyone, guys, so it's gonna, like, a lot of y'all's questions get skipped, but like I obviously can't go over them all. Would you have taken why I'm short? No, because there's no SMT. I think the signatures itself are pretty decent. They're pretty good. So all this is, I've talked about this before, but I'll actually pull it up. So this is a part of my 2.0 course. This is phase of price. Oh yeah, is this it? Yeah, so when you're in a continuation, right, and price consolidates, like a bullish continuation, if price hits the manipulation high, if it like manipulates high first, which is not ideal, right? Because we want to manipulate low to then go higher to target the consolidation high. But if it takes out the consolidation high first and then reverses, and then takes out the consolidation low, and then reverses again, that's just a higher time frame continuation signature, right? It's like it's seek and destroy. It's a type of consolidation. So we know that when price consolidates, it should expand again. It's right here, right? So it's simply just like expansion, consolidation, expansion, but it's kind of like a type of manipulation as well, obviously, right? So if you actually look at this price here, just going off phases of price, it can make sense to short because we're obviously really close to this low. We're very close to this low. And you see price expanding, right? It runs the low first, but can't displace through the highs. And that could be a reason to go lower, right? You have a nice close, right? Just no type of, I think you might have a PSP with RTY. Yeah, you have a PSP with RTY. You can see like seek and destroy type of signature. You have like one stage SMT. I just like the signatures in general. Like they're pretty nice. Even if there is no SMT fill or nothing like that, I mean the signatures are really clean. Like you have a nice V shape and stuff like that. I thought it was okay. Like it's not bad. If you don't require SMT here, because clearly price is reversing. That's kind of like the whole point. You want price to reverse. So it wouldn't be that bad, but the profile is just not the best, right? For example, like the day is like pretty much opening low first, which is not ideal. And then opening high. It's just like, I woke up late, so I don't think I would have traded that. There was this as well. Like maybe a long opportunity, because the profile supports more longs for the day. My concern is these equal lows down here. That's kind of interesting, right? That's not really the cleanest long. Like the profile for the day supported long, but not really the context. Does that make sense? But there was like this SMT fill right here at like 9:30, and that can be to get to you know these highs that we had, you know these equal highs. That can be used to get there if you traded that. So it's not a bad trade necessarily, and that would be right here. You can even see the lower time frame, guys. So what are we in? Lower time frame expansion. What do we see? Pretty much price taking highs, right? Can't displace the highs, displace the lows. It's just a type of consolidation, right? And you have this CST here. You could take this CST. You could target that. That's what 8 took. It's a good trade, in my opinion. That's really all I saw, honestly, as far as like actually waiting for SMTs and stuff. Trading view colors, sure. Hold on, let me see what Riff said. Behind on questions, my bad. Yeah, I'll scroll up, but or down. Oh yeah, my chart colors. So the body is just the second gray, 50%. This is just a black. Wait, I guess it wasn't the black. I don't know what it is then. It's just this though. Whatever that is. This is the black 30%. This is the black 50%. The wick 40%. The wick 40%. That's it. Holy moly. I was really behind, huh? What is strength switch? Explain it in simple terms. It's to confirm lagging assets, essentially. I would just watch my last YouTube video, bro. You can watch other people's YouTube videos too, like Afis. When should we do market entry rather than? Oh, this is a good question. So majority of the time, you guys see me market execute because it's all about RR. That's all it is to me. It's about RR. If my draw is here and price CST is right here, I'm not gonna market execute because the RR to the high is not 2R. But if I demand a retest, for example, like this, I can get 2R. Does that make sense? So this is when I would demand it to retest. Does that kind of make sense? Or if my stop loss is just like too big, then I'll demand a retest. That's what it's about, really, to me. If I can get 2R with a market execute, I'm gonna just market execute. I don't want to get missed on the trade. It's not worth it for extra RR. Why is this not a strength switch? This asset looks like it took the low, and there's no bullish signature. Like if this asset took the low, then it's weaker. And here you have a bearish candle. That's not a strength switch, and this is a bullish candle. It's just a two-stage SMT. It looks like. It's just a regular two-stage. You don't need a strength switch necessarily to trade every reversal. But like I said, I just went over it in the earlier basically. If you want to trade a two-stage SMT with no strength switch, just require all assets to reverse, really. And this is a good thing to see with PSPs. If both assets print a candle 2 like this and just close different, one's bullish, one's bearish, that's a PSP. But that them both having a C2 closure is showing they're both reversing, right? So if both assets have like a nice clear reversal signature, then there you go. This looks like a two-way. Yeah, this is just a two-stage. Okay. This candle is the PSP. Yeah. So you see how you'd have to wait until this asset reverses and then it expands? This is what I'm talking about. Okay, so yeah. I was thinking that this is the PSP and this is the PSP, but no. This is the PSP right here. I think, at least. I'd have to see the chart, but I think so. Yeah, guys, chart colors and they're not gonna really make you profitable. Have you tried everything in 2.0? Yep, pretty much. Yep. I think I just have like one thing to teach. It's like a quarterly open, like quarterly stuff. Explain strength switch in Fortnite terms. Is there more to profiling than just open, high, or low? Yes. Open, lower, high. Yeah, for sure. That's just how a candle forms, really. Okay, I already went over the. Dude, am I like really behind? Okay, no, we're pretty caught up. We're pretty caught up. How do you anticipate consolidation higher time frame? Last week on metals, I took trades. I thought just didn't deliver because it was in consolidation almost all week. So the way it's just like how we anticipate any consolidation. It can happen after when it's like really extended like this. It's really hard, but the easiest way is just after like a large expansion candle, like a large range, large series of expansion candles, especially into key levels. Like if price takes out relevant level, we can undergo, if it's a higher time frame, we can undergo multiple days of accumulation because after expansion, we can consolidate or we can retrace. Even retracements, higher time retracements can be really ugly because, they fail to like displace through lows. They make really deep retracements back into ranges, creating like failure swings. Those can be really ugly to trade. But if price consolidates, for example, let's go over gold. Like this is how we know it's in a consolidation. So this is what I'm talking about. Like really large range. This day can be really anticipatable to consolidate, right? Really large expansion day. Like this one day is basically bigger than the whole last week's range. Like literally, it's bigger than the whole last week's range. It's a very, very large move. So inside barring makes sense, right? It can also probably anticipate a gap forming, right? After a large expansion candle, a gap can form, which creates an inside bar typically, right? Or a small range candle, right? And that is obviously not a continuation usually, right? But here you get a inside bar, so this naturally is a consolidation day, right? An inside bar is basically a mechanical way to define a consolidation. For example, like, do you see how we expanded multiple series of expansion into a high? You get multiple days of consolidation. This is a good example here. So price hits a key level, for example. You see how price hits a key level, but it doesn't expand. See how it doesn't really expand? It just like bullshits. Now you're in consolidation. We should, if this is going to be a reversal down here, we should expand, very violently. So when you look here, this day can also be easily considered a consolidation. Why? Because we don't take out the consolidation high on any asset, I don't think. Right? They all leave that high. You see that? So again, we're just still in consolidation. Right? Still in consolidation. Right? Until we take out this high. This is what I traded. I just waited for an SMT with the consolidation high, which this is valid to trade, but what do? We just edge the low, right? We're literally still in the consolidation. Price just reversing from internal levels. That's a consolidation signature. Price reverse from internal levels and leaving failure swings at the opposing side of the range. Still consolidation. So at this point, we know that this is not reversal up here. Like it's not reversal. So we have to resweep the high essentially. Right? Resweep the high, and then price still doesn't do shit. Like honestly. I think Euro, yeah, basically Euro creates like equal highs here on some bullshit. And then we basically get this here. Then we get a two-stage PSP. So now we have a Kraken correlation to potentially expand now, right? Because that's what we pretty much need for expansion. You need a Kraken correlation. So you're pretty much just waiting for it to happen. Does it happen in the best way ever? Not really, bro. Like, look at Euro. Oh, remember Zero? I gave you that. Remember that lesson I gave you about failure swings? About higher time frame candles? Do you remember that, Zero? I don't know if he's here. But yeah, this is that exact lesson that I gave you. You can see it right here on like how to mainly trust failure swings. It's within a higher time frame swing. So guys, if you guys didn't know, if you have a failure swing, for example, the best failure swings basically to trust or trade it from are from higher time frame swing points. So it's only out of a relevant level though, because that's the only time you'd ever expect price to reverse from failure swings is out of relevant key level. So this is what I mean by that, right? Candle 1, candle 2. If candle 3 is like opening really close to the previous candle's high, but doesn't sweep it out like this, like maybe it opens like right here, and it opens high, but doesn't take out candle 3's high, it's still a swing point. Candle 1, candle 2, candle 3. It's just not ideal, right? It's not ideal. So on the lower time frame, candle 3's high will be very, very close to candle 2's high. So it's gonna look like failure swings. But that's like that's like the best way to basically trade away from failure swings. So that's pretty much what you see here. You see basically candle 3, it's just opening high and basically creating failure swings with a swing point. That's the best way to trade away from failure swings, in my opinion. And if we go to my slides here on Asset Sync Part 2, it's going to show you how to really trade away from failure swings the best. So this is with an advanced premium discount, but it can also be with failure swings. So you can just wait for price to expand away from the failure swings. And remember we talked about over here. Wait, where did we talk about that? It was like some slide it's some slide over there randomly, but it just basically talks about when price reverses, for example, we don't care about these internal levels. We want them to fail to manipulate. So if there's a failure swing like this, say it's a failure swing here, right? We're not going to trade the reversal, right? We're not trading the reversal. We're going to let price expand away and then fail to manipulate these internal levels. Create a gap. Okay, so now we have a range like this. If this gap is confirmed, right, this basically confirms that we're going to continue through these highs, continue towards the overall draw out of this high time key level. Okay, so it's honestly best when this would be like candle maybe 1, candle 2, candle 3, right? This low is candle 3's low, if that makes sense, okay? This is the best way to trade it. So you just wait for the universal sequence, or Especially with like failure swing SMT, we wait for strength switch. So that would be right here. Right. So if you have these close proximity SMT lows, right, you wait for a strength switch basically. Okay. So that's what you have here. Actually, you have a strength switch here. That's a lot better to trust, at least. It's not high probable. Is it the ideal? No. Not ideal way to reverse? No. But that's the way I go about it mechanically. That's when I can trust a little bit more, you know? How do you trade the consolidation days? I typically would rather not. How do I find the right draw liquidity? It's just going to be on the opposing side of a higher temperament key level, brother. That's the only draw liquidity you should be using, really. So if price trades into, for example, price is trading into this gap here on the daily time frame. It's like when we reach this gap here, I mean, the only draw liquidity is the actual opposing higher temperament low or anything internal to it, like this internal low, this internal low. You know, that's to the left side of the curve. But on the right side of the curve, your draw liquidity can be the pullbacks. So, you know, when price basically reverses here, the lower time frame will expand, retrace. That's a draw liquidity. Expand, retrace. This is a draw liquidity. And this will be a gap. It's going to be a lower time frame model, right? So internal to external, all the way into this low. Makes sense? Other ways you can go about draw liquidity is like, what is price closest to? Is it closer to like the highs, the lows? You know, for higher temperament at least. And then you just need like a profile to like support that idea in a key level. Can you teach how to trade those really hard consolidation conditions when the continuation entries fail? Only. Oh, okay, yeah. I mean, I would rather not trade this, guys, but like, the best way to trade consolidation is in continuation. So, for example, if price expands, we're in basically bullish order flow, and then we consolidate, right? This is when price can do this. It can expand, consolidate, and then expand. It's just not ideal, bro. It's not ideal to trade this type of way, but the way you would trade it is like an internal manipulation. For example, this is a failure swing SMT. Again, not ideal. It's like this. It's like failure swing SMT. It's not ideal. But what do you do? It's the same thing. You wait for this, like strength switch or the universal sequence, basically. So you got to let price show you that price is actually going to reverse from this failure swing stuff, you know? So here you have like a internal level. So this would be like a universal sequence. Then you can actually trust it potentially, right? Or again, a strength switch or something like that. But again, I'd rather not trade that stuff, you know? Rather not. I wouldn't want you guys to do that either. Dude, what are we doing? I'd really just not trade consolidation, guys. Like, there's plenty of opportunities without trading consolidation, you know? Like, guys, there's so many opportunities trading. It's ridiculous. Like, it's actually insane. What do you think about trading from via PSP? Yeah, that'd be like a regular two-stage SMT, but again, I'd rather wait for like the highest, since it's such a low probable thing anyways, like trading consolidation is so low probable. I'd rather wait for high probable sequences to almost like make up for it. So strength switching and universal sequence are the highest probable. Bro, can you please explain how to confirm high day, low day? Yeah, it's really just the same things, right? So it depends on what type of day you're trading. So if you're trading a reversal day, like a reversal daily candle, then you need to hit a daily key level ideally. At least on the, if you're anticipating like like a long-term reversal at least. Ideally, it's a daily key level. Sometimes, for example, maybe within continuation, daily continuation, you can trade a reversal day if it maybe hits like a gap, right? If it hits like a gap, for example, you can trade a reversal day. Ideally, it's just hit some type of higher time frame key level. Like that's the only way you can anticipate reversal kind of forming, right? And you see the profile to support that. So if it's a, let's say it's a swing high on the daily time frame, right? I ideally want this day to open high first when it reaches its draw liquidity, because that would support a bearish day, because we want days to open high first, right? And expand away like that. So the profile needs to support this idea. And it's the same thing, right? Two-stage SMT. You confirm the high of day with a 30-minute or above swing point. Ideally, you want that 4-hour candle aligned. So basic GXT, like that's never going to change. Basic GXT, all that alignment stuff. That's all you need, man. Two-stage SMT to confirm it. Profile, you're generally pretty good to confirm a high day there. It's all about picking the right like key levels, like about filtering the right key levels and the alignments for that, right? So we're not going to use like a 30-minute gap or 1-hour gap typically to confirm the high day. Like it's 4-hour gap for a reason. For example, like this is what I did here, right? In continuation, the key levels are going to be hourly and above, right? For reversal days, ideally it's on the daily. Ideally. So if you look at this daily reversal candle, I trade this daily reversal candle, right? It's because there's a daily gap here, right? In SMT and two-stage and all that, right? I'll actually show you this real quick. So this is the daily reversal candle. See that daily gap here? If I go to Euro, it trades into it. So again, the higher temperature is trading into a key level. So again, I can actually anticipate a reversal candle potentially forming, right? And then it's all about wick size. So we can trade any candle wick size. Like you can trade a large wick, right? But you just need to understand your targets, right? If it's a large wick, it can't expand beyond the open. So you need to adjust your targets accordingly. It just has to form a certain way. Like if it's a bearish reversal candle, for example, it has to open high first. 100% has to do it. And ideally, the low of that candle is 1800. Those are the best reversal days to trade. But if you look here, first stage SMT with your hourly or above key level, and then you just confirm the high of day with a swing formation, right? So if you look at this bearish candle, it's 1800 bearish candle on the 30-minute. Over here, it's bullish. So there's your two-stage cracking correlation. So that's all you need, right? Simple as that. Now, if we go to, let's go to this bearish day. This is what I traded. A lot of y'all traded this too, this continuation. Confirm the high of day, hourly or above key level. If we want to use a 4-hour, or if we want to use a gap to confirm the high of day as our key level, it's going to be the 4-hour most cases, right? So here's a 4-hour gap. So now you just need two-stage SMT, ideally to confirm the high of day. So you look at the profile here, how it's opening high first. This supports a bearish move lower, right? The profile already. So this is great. Supporting a bearish daily profile. So do you see this 4-hour candle? How it's a very large expansion candle. We don't want to short this candle because of that, it would have too large of a wick, right? So we're basically viewing this 4-hour candle as retracement. And we want to see this next candle expand and reverse off of the previous candle's high. Again, we can only anticipate this as a reversal candle because it's in a key level. The previous candle hit a key level. Just like we can only trade a daily reversal candle because it's in a key level. Does that make sense? That's the only way you can trade a reversal candle. It's got to hit a key level, right? And ideally, there's SMT. So naturally, we already use two-stage SMT to confirm the high of the day. If you're trading a reversal candle, that's basically the reversal of the day, right? That's a New York reversal. Or sorry, no, it's a Asia reversal. Sorry, it's a 2200 candle, which is an Asia reversal profile. So when I drop to lower time frame, you're gonna see that we have this little SMT here, right, in the gap. So you don't have SMT with the gap. So you need two-stage SMT in the gap. I believe there's a two-stage PSP on the hourly time frame. So 2200 is bearish over here. 2200 right here. Wait. 2100? Yeah, 2100 is bearish, sorry. 2100 over here is bullish. So there's your two-stage SMT just via PSP. But if you drop to the 15-minute time frame, the high of that two-stage PSP is a strength switch PSP. You see this? Bullish candle, which creates a failure swing. Bearish candle, right, which actually swept the high. So there's your strength switch. So this is why I traded this here. And then ultimately we ended up like creating SMT down here. It went very nicely, pretty decently far, but you're gonna see the strength switch that we created, which just retraced the market like this here. And then price ended up expanding higher, etc. Right? But yeah, that's how I confirm the high day, low day. The same thing every time. I'm probably really behind right now. Face reveal win. I don't know. You know that one picture I posted on Instagram? That filter? That was actually me. Can you go through how to pass evals? Info and trade. Yeah, I'll probably do a video one day on how I approach prop firms in general. But I think it's best to not full port your evals because I think it's just trade it normally like you would a funded account, bro. Just take your time. And when you pass an eval the right way, it's going to give you confidence to do the same thing on your funds account. If you can do it on your eval, if you can make 6% or whatever it is on your eval, then you can make 6% on your funded, right? But if you just full port an eval, then you didn't do anything to earn that. You just pass the account, and like if you can't pass an eval, you can't get a payout. It's not happening, dude. So people will just full part eval that are unprofitable. They'll get funded and just blow the account because they don't know how to actually trade. So I only think you should full port evals when you're actually profitable, you know. Bro. Yesterday I took a 5-minute CSD entry in GC before the 5-minute candle that you took out. Wait. I don't understand where that would be. Maybe show me a picture. Wait, one day? What do you mean? What did I answer that to? What did I respond one day to? YouTube live streams, New York session, 2 days a week. I'll probably start doing one day. I'll probably you're gonna go again with one day. Maybe I'll do that one day. Like YouTube streams. I did YouTube streams like once or twice, but my OBS was super like messed up. So I haven't done it since. What are the requirements for trading high? I kind of just went over that, I think. Passing evals is easy. Yeah, once you have a system. Do you have a FOMC weekend news protocol? Nah, bro. I don't really have a news protocol, dude. I don't really believe in that stuff. It's not really a part of my trading. I just won't trade before like for example, if you like CPI, like I'm not gonna trade at 7 a.m. or 6 a.m. or like the real volatility will come at 8:30, So I'll either trade like a positional entry like right before 8:30 because maybe you put a reversal in right before, or just let it pass. Like typically how I go about it. When are you trusting 30-minute fill? Yeah, I'm gonna go over that in a future video, bro. There's like some times where you can anticipate gap fills, but that little rule is really about 15-minute gaps, high end ranges the majority of the time. But as far as like, because what you're gonna see, bro, is like how gap fills are created, or not gap fills, breakaway gaps. How they're like created is this is how it usually happens. So it's usually price reverse expands, um, and then you'll have like it's hard to explain. You'll basically have a 30-minute gap here, maybe. Price will retrace into the 30-minute gap. It'll have, you know, a confirmation, like a SMT fill or something. It will reverse, okay? But on the close of this 30-minute candle, for example, this low will be an hourly gap. Does that make sense? Kinda. And the way you wanna, you can already anticipate to happen because you can see it happening live time. Like, for example, if there's an SMT fill here on the 30-minute, but I go to the hourly chart and I see there's two wicks they're not meeting or something, you already know it's gonna happen, right? But there's like it's kind of hard to explain, bro. It's like if it's super low in a range, for example, if this happens like low in a range, it's much easier to trust. Typically, if it's like lower in a range, because like gaps lower in the range, for example, are much more likely to be left open, whereas gaps high in the range are likely to actually get filled because price has already expanded and then we can undergo a new phase of price, etc. But the way I like to do this is if I'm gonna maybe anticipate a breakaway gap, basically the low of this not the low, it'd be the high of the hourly gap will be like a two-stage SMT, basically. Does that make sense? Right, so if this is a reversal, then we don't have to retrace. But I really want to wait for the whole candle to close. Okay, so I really want to demand it to actually reverse and stuff like that. I'm not going to be trading the SMT fill in 30-minute. I'm going to wait for it to close. Does that make sense? So I'll wait for like the candle to close and stuff like that. That's when I will, most cases, demand like a second CST usually to confirm. So if this is like the next hourly candle, I'm basically trying to confirm that's not going to go and do this into the hourly gap. So I'll demand like a intercandle CST or something, right? Something like that. But you can't get it right every time with that stuff. Like you're not going to know every time if it's a breakaway gap or not, That's why I'd rather not long like super high in a range and stuff like that. I'd rather not. It's the best to just wait for an actual tracement, an actual tracement. The whole all these questions basically are all this type of SMT fill. If I can find it, I probably have a slide somewhere on it. It's really just consecutive candle SMT fills. So for example, candle 1, candle 2, candle 3. This problem arises on these type of SMT fills where this next candle is creating a candle 2, basically, right? And you're trading candle 2. And most people, for example, they'll like trade this one, for example, but they don't realize like this low when this candle closes is a higher time frame gap, for example. That's when this problem happens. It's that type of SMT fill. It's pretty much just best to wait for the candle to close. But you're going to see a lot of times, bro, if it's this type of SMT, if it's this type of continuation where this is a PSP It's a 2-stage PSP. These are the best, in my opinion, to trade. Explain lower time for entries. I kind of already did that. I also explained how I manage my trades, which I think a lot of you guys should try. How do you approach the analysis when trading? So as far as daily bias goes, I don't have a daily bias every day. The only way I ever have a daily bias is if we're within a higher time frame model, right? Or like there's a clear higher time frame draw, right? So this would be easy daily bias, for example. It's like when we hit a higher time key level, I can expect the next couple of days to expand. That's when you have a daily bias. But a lot of times, maybe the price is in the middle of nowhere. Like a lot of these days, they're just in the middle of nowhere. So it's not necessarily a daily bias. You're kind of just going off of the profile, and you just have shorter term targets, pretty much, or like whatever you're closest to. For example, like I was actually bullish here. I was actually bullish this next day just because we're closest to this high, rather than this low, you know. But price just does some bullshit sometimes, and just reverses from nothing. Like price literally reverses from basically nothing here. There's a PSP here, but again, I'm not going to pattern trade a PSP. It's literally just creating fair swings. I don't really care about that. The only time I trust this is price starts to expand away. This is actually me. Why are you leaving Lens? Discuss. I'm not even gonna get into it. Mainly it's just because you know, I think my teaching style, like I want to do things my way, really. Like I don't have ownership in the Lens, guys, so it's not like I can just do like things my way and stuff like that. A lot of people think I have like ownership in Lens. Like, no, I do not. How do you approach the analysis when trading? Okay, kind of went over that, I believe. How do you decide when to trade London and Asia? So the simple answer will just be when the daily is actually opening near the invalidation level, right? So if it's opening near the invalidation level, then it means it's likely to hit that refined key level early on in the day. So like this is a great example of that on gold on Monday. Like why do I expect an Asia reversal? Because there's a daily gap right here. And we're opening near it. Like look how close we're opening near the key level. See that? So if Asia hits the key level, then it can form the high day. Like literally 1800 hits the key level. It can 100% form the high day there. It's especially like different assets have like different kill zones or like times they usually form high day and stuff like that. Like Asia for like indices, a lot of times is not going to form the high and low of day. Most of the time, that's going to be in continuation, is when it forms the high and low of day. Yeah, it's typically a continuation. Like daily expansion candles is usually when that happens. But for reversal days, it can happen on indices, but a lot of times for indices, or no, for metals, Asia can definitely form the high and low of day. So kind of like different markets have different kind of like kill zones, I guess. Bro, share your one trading secret, which you never shared. I don't have any. I pretty much shared everything, bro. There's no secret enigma. So if it's a gap fill high in a range, only 15 minutes, you most likely won't take it. Yeah, I'll just wait for 30 minute or hourly. Here's your checklist style video for those of us. Yeah, I can. Because there's a lot of videos I gotta make. That's why I say that, bro. There really is a ton of videos I can make. I'm in a battle with FOMO. Like I know each thing. I know. Okay, this is insane. Yeah, bro. Like, I would. I mean, do you have data like on your system? Because once you have data on your system and it's proven to be profitable, there's no reason to not just execute, right? That's what gives you confidence. Is data behind your system. You can't just go into it. What's your preferred time window to trade New York AM? Yeah, for indices, 9:30, 12, pretty much. You can trade PM session usually during with a lagging asset. So maybe a leading asset in AM session will take a draw out. Lag asset in PM session can get there, or you can trade PM if there's an open draw. So it's really about open draw either way to trade PM session. Or you can trade PM session on a reversal day. So let's say AM session expands into a higher typical level, then PM session can reverse to create the daily reversal candle. Does that make sense? So you're basically just trading PM session back from the daily range, and this move higher is just creating a daily wick, and then the next day will just expand. So you ever seen like PM reversal, like PM reversal and like Asia expansion? Happens a lot. How to determine premium discount based on each profile? What do you mean each profile? So you mark up premium discount just from the previous candle that you're trading away from. So if it's a 4-hour expansion candle, you can mark out that whole 4-hour candle. But premium discount, I only use it for advanced premium discount, really. And that's just to filter out SMTs. That's literally all that's for, to filter out SMTs. And then I just use premium discount for wick size. And that's what I'm talking about, with measuring the previous candle's range. That's literally it. That's pretty much it, at least, I think. Like, it's pretty much all I use it for. Will your mentorship always be opened like the lens for future students? Yeah, it's going to be like a community server. At first, it's likely going to be a small group of students. Just they're almost going to be like not like test dummies, but they're going to be like the first group, right? And we'll make adjustments of that, and I'll open up. You were a student of the MXM trader? Yeah, I've learned some things from the MXM trader, like it's like basic things, right? Like universal models. He's basically the one that really introduced that, I think. Maybe ICT did, but he kind of simplified it. So like internal to external, ERL, IRL, order pattern ranges. Pretty much what I learned from him. Can you use SMTs between, for example, silver USD? No. This is how you do it. This is how you use. A lot of people are really confused about gold. How to use SMT between these trades. It's really simple. So if I'm gonna trade gold, I'm going to use SMT between euro, GBP, and silver. So it's almost like I'm using with 4, like I'm using a quad triad, but no. The difference is, guys, we can only execute on gold, right? So that it doesn't even matter. You can only execute on gold or silver, right? You see 6 markets here, but you can only execute on 2 of them, so it doesn't even matter. That's why I don't care about the SMT necessarily, right? It works very well too. So if you want to trade silver, you're only going to use it with the silver triad or with gold. If you want to trade gold, you're only going to use it with the gold triad or silver. Really simple. Are there certain propulsion blocks you won't trail into? personally, I keep getting trailed out. It's a lot harder to manage when you enter the propulsion block because again, your entry is higher in the range. For example, um, like for example, price has to go a lot further for you to go break even here. So, for example, this right here, like yes, it can work. Like moving your stop loss, like right here, but it's so much better doing it down here. So off of the first CST, it's so much better. But it can work like this too. Or you can just wait for price to like actually expand and hit something. Or you can use the 2R rule. So if price goes 2R, you go break even no matter what. But yeah, it's so much easier to do it like down here. It's so much more like protected, in my opinion, to move your stop here after entering the first CST. I prefer into the first CST, honestly. No, I am recording. Date create the PSP concept? Are you saying Day? Trader Day? Yes, he created it. The only thing I created, I guess, is the strength switch PSP. That's just because I created strength switching. But yeah, PSP is 100% his concept. Thank God for him, dude, because PSP is an insane concept, dude. It really changed my trading. PSP is amazing. What's your checklist look like? I feel like I have like video, like pretty mechanical checklist, guys, already. Please, short lesson. Yeah, you're gonna see it in my next YouTube video. You will learn a lot about the coupled markets. Now, it's not a thing that happens every day, but when it happens, you won't be as confused. It's still sometimes confusing, especially when it's happening in the middle of like nowhere. It's really confusing. You basically got to know the draw liquidity. That's really all you have to know. I should just post a little thing on Twitter about that. I already showed my chart colors, brother. Sir, after a 9-minute cycle, CST and 5-minute direction, enter in CST or wait for a good displacement. It all depends, right? On most of the time, it's just 5-minute CST. For example, like if it's Tuesday just SMT, but this is the 90-minute sequential SMT, then all you need is 5-minute CST. If it's only like one Kraken correlation, maybe a 90-minute sequential SMT. Like if we're reversing from only like one stage Kraken correlation, I usually will wait for a 15-minute gap to trade the universal sequence usually. Dreddy, I basically just group the firms that have the same rules usually together. A 10K payout would be nice right now. How do I send a galaxy? If 8:30 news doesn't do anything to any highs or lows, do you expect? Yeah. A lot of times 8:30 is not relevant if it's not CPR NFP. A lot of those other news events they don't really do anything. Honestly. Sometimes PPI is decent. What about cases where 2 out of 3 correlated assets in the trade print a C2, but the third asset doesn't? Is that still valid to look for trades in C3? That would if it's a PSP, that would make it relevant. Like if 2 assets are closing bullish, one's closing bearish, then yeah, you can trade it. But I don't. That doesn't really mean anything to me, honestly. If it's just a regular swing point. doesn't really mean anything. Because I wouldn't trade that. I don't like that wouldn't be like a two-stage SMT if it's just like a regular swing point trading. I don't just like trade swing points at reversals. I have to wait for like two-stage and stuff. If that makes sense. But if let's say it was a two-stage, for example, then I wouldn't care about candle 3 on the other asset or whatever this example you're trying to say. So I think you're meaning like let's say like right here. I would rather just demand a resweep, right? So let's say the other assets right here close C2, but on this asset it closes like this. Typically, what you're talking about is this would be like a bullish expansion candle, and the other assets would be a bearish C2. This is when you demand a typically a two-stage PSP, so you just demand a resweep. So this asset will create a C2 while the other ones expand because this time window, this hourly candle, did not reverse on this asset, but it did on the other assets. So this asset has to reverse while the other ones expand. Does that make sense? What do you think about trading indices in London session? Yeah, there's a time and place to trade any session on any market. Just certain criteria has to be met. I just don't trade London session a lot because it's really late for me. Sometimes I'm up at that time, but majority of the time not. Bro, why don't you create a checklist PDF? Okay, I can. It's already like I feel like it's out there, but my strategy is a little bit. There's a lot more moving parts, than majority of people's checklists. There's a lot of moving parts in my strategy. I feel like so it's kind of not like a 1, 2, 3 type of strategy. I'm not saying that Matt's is, but you know what I'm saying. It's a little bit harder to do, I guess, but I could do it. It's gonna be like a pretty vague checklist, though. Like I'm not gonna add ASIC sync to it and all this stuff. You know what I'm saying? Like it's basically just gonna be my flowchart from my course. Like that's pretty much what it is. How do you stop looking for a trade on every new 1-hour candle open? What are the 4 indicators you use? So you can't look at every hourly candle because most of the candles are not coming from a relevant area. You pretty much just wait until price engages with the relevant area, and then you look to trade the expansion candles away from the relevant area. Those are the only candles that we care about. The 4 indicators, I don't really use them. This is the TH Fractal Model Pro, which I honestly don't use. This is the same thing basically. It just creates the higher temperament candle. I only use this for teaching purposes. That's it. This shows me the news, and then this shows me the sessions, but I don't use this either. Again, I used to use it just for teaching purposes, but I don't use any indicators really. I will soon though. I will soon be using indicator. You guys will see. Bro, just call the students dummies? No, did it? Oh, test dummies. Dude, am I that far behind? Holy. I'm telling you, man, there's so many questions. Start your mentorship, sir. Why you say that? Yeah, do you guys want a GXT indicator? You're Don. I know you don't, bro. Oh, damn, you guys don't want it. Okay, shit. I'll go kill myself then. Call it off, bro. I tell you guys well, dude. I tell you guys well. You guys don't need indicators. I just want the alerts, really. I want to automate my trading as much as possible. Like, just have like an alert when we have like a SMT fill or something. That's what I'm gonna use it for. Holy, this is going so fast, bro. This is going so... Yo. Guys, I swear, as I this week. This is actually crazy. Would you prefer fix RR or to hold to draw? I like to hold to draw, bro. I don't do fix RR. How would you manage partials to hit to the draw liquidity? So there's gonna, like I said, there's always gonna be relevant draws towards the draw liquidity. For example, let's say this is your draw liquidity, let's say, and this is like the pullback in the, let's say this is a pullback into like a 4-hour gap or something. So you're basically trading internal to external, but this is just an internal model to the overall model, right? Because remember, this is daily internal to external here. So if you trade this reversal up here, you can partial at relevant levels on your way to the overall draw liquidity. Does that kind of make sense? Maybe you traded this right here. Let's say you traded this, and this is your overall draw liquidity. Because sometimes, for example, like a draw liquidity, it's too out of reach for the day or something. So it's best to just TP at like these hourly levels and stuff like that. Here, I wouldn't even say there's anything relevant in this whole range. There's really nothing relevant. Like what low are you gonna use? You know, this one or this? Like, I don't know. I would just use the EQ of the range, bro. EQ of the range can make sense. Yeah, this one too. Honestly, like if you trade this, if this is your overall draw, this is kind of hard to say. There's like nothing. None of this is relevant. Like this is not relevant. This is not relevant. If it was like a larger low, that would be relevant. I don't think this is relevant at all. Like price, basically, the price hits level, it's not going to reverse, is what I'm trying to say. It shouldn't reverse. So again, just EQ the range is cool. Honestly, this could be decent. Let's say there's a SMT up here, and you took like a 5-minute gap or something. Let's say you just took this. I'm just using an example, right? And maybe the draw liquidity is like a higher time frame gap or something, because this just looks like a large range here. If this is your draw or something, then this low can be these equal lows can be a good partial point. But anything internal to this range, it doesn't really make sense to TP in. Like TPing anything here doesn't make any sense to me. Like this would be a great partial point. And then, you know what I'm saying? Like it's just like knowing the draw and then relevant levels on the way to the draw is where I TP usually. If there's nothing internal, I would just like TP, like EQ the range maybe. I need to piss so bad. Oh, I need to piss so bad, brother. How long is universal sequence yesterday in GC? All right, let me tell you what's wrong with this, brother. All right, who can tell me? Let's do a little. I already did the recap on why this is a bad trade, but who can tell me why? And we'll pull up the indicator here to show you. This is basically giving it away, but like, why would we essentially not, wait, what day was it? Hold on. That was this day, sorry. Wait, was this the day? Yeah, it was. 1800. Yeah. Let me pull up my indicator to actually show the right time frame. Where is it at? Wait, was this the day? Was this the day you're trying to talk about? Oh, no, it was this day. My bad. This day. All right. Was it this day? No, this was yesterday. This was yesterday. Okay. Well, I would more so be bearish. Or sorry, yeah, bearish this day because of these draws. So again, any move opposing to the drawn liquidity, I'm going to view as a retracement, right? So if we engineer this high, so basically price this could have been the high day, right? Like for example, this could have been the high day. It does expand away. It creates an SMT down here, right? Then we just engineer a relevant high essentially. So if price is going to continue lower, where's the only place we can continue lower from? Where's the only place? It'd be right here, right? So this, when price engages with these relevant levels, like I want price to essentially reverse here, right? And again, this is the exact same thing pretty much as just seek and destroy, basically. Like expansion, SMT, that's the seek and destroy signature, basically, right? So this is exactly where I would rather like want to trade low, right? You can see right here, it trades into this high. This is where I want price to reverse from, right? You see the low of day over here is 1800. The day also just opens high first. This is kind of like the filters that I would want to see, right? And you get the strength switch here as well, which is perfect. Like that is absolutely perfect because it's that close proximity SMT, right? So I talk about the way you trust this failure swing because you did mark that, right? You marked out the equal high SMT, basically, which we'd expect to break. But when it has a strength switch like that, then that's when you can typically trust it, right? Or you just wait for the universal sequence like this, gap, gap, which you do get kinda on the 15-minute, but there's no like a PSP in it. It's like right here or something. You've got 15-minute gap like right here. There's no SMT fill within it. So I woke up late anyways. It's not like I would trade this anyways or anything up in here anyways. I traded this. So again, this SMT, I'm expecting this SMT to break right here because all assets are expanding away, close proximity SMT, and I wanted to see this SMT fill be used to continue. So basically, I'm anticipating that GC would displace through this low, while Euro and GBP catch up to this low. And why can I anticipate GC to continue through it? It's because it has objectives beyond this low. It still hasn't taken out these deals, which we never got to, unfortunately, but that was my logic for taking it. And it looked like this. I was holding to here, but price reversed. As you can see, pretty much when he broke the SMT. So when price breaks SMT, it can reverse price, but I didn't want it to reverse there because it's still a failure swing on GC. So for example, when price breaks SMT like this, it can reverse. So you can see that if you have SMT like this, we have that close proximity SMT, you expect it to break. So when it does break, it can reverse like this or retrace. In this case, we would expect it to be a retracement because again, any move opposing to the drawn liquidity, this is the drawn liquidity, should be used as retracement, which is why I shorted again because I'm viewing this as a retracement. We had these really nice equal lows. Look at these equal lows. I don't even know if, was there any like confirmation to it in there though? Like, was there any like SMT fill in there? Indicator for alerts for working pulse. Yeah, I just want indicators to just tell me when to hop on the charts, bro. I don't want to stare at the charts all day. That's literally how I'm gonna trade. What's the best RR to trade? There's no best RR to trade, brother. What happened to I'm taking 2R all 2026? Bro, I tried that, man. It's not for me, dude. Like, actually, it's not for me. It works for a lot of people, though. What's the lowest time frame to trade or to look for SMT? 15-minute and above key levels. Or just with 15-minute or above like swing points. Probably gonna end this pretty soon, guys. Been at it for a while. Any tips for trading all-time highs? Yeah. So your draw liquidity just gonna be like the most recent high that's engineered. It's just gonna be the retracement. So you have to wait for a retracement, obviously. So if we're at all-time highs, you're literally just waiting for a retracement. That's your draw liquidity. As soon as you take it out, you have to wait for another retracement. Either we like manipulate it to go lower, or we expand through it. Okay, retrace. All right, cool. That's your retracement, or that's your draw. That's really it. Do you have a swing approach? I've never really swing traded too much, but I feel like I would have an idea if I did. Why not standard deviations? I just don't really use them too much. You could use standard deviations for all-time highs, I guess. I don't really believe in standard deviations, to be honest. It's kind of just random because it's all for example, it's all what's the subjective on, you know, where you're anchoring it from, what time frame you're anchoring it from. Where if I just use highs and lows for targets, it's not subjective. I'm done with GXT. Tory Trees is calling me. Will Asset Sync drop before GTA 6? I'm gonna try to do it this weekend, but no promises, dog. I gotta stop making promises. I gotta stop making promises, bro. I really do. I'm sorry. You go B after 2R? Yeah. But I go, I did a little lecture here on how I manage. I can go breaking before 2R under certain conditions and stuff. Does IQ play a role in profitability? Dude, I'm pretty dumb. Like, I'm pretty stupid. I didn't go to college, didn't do none of that. Not the smartest guy in the world, man. It's just about hard work. Repetition, bro. If you think about it, I mean, it's just a pattern, right? that's kind of what we're trading. We're trading patterns. That's really it, dude. You can recognize it. I mean, at the end, we're not pattern trading, but you know what I mean. It's just sequences. Doesn't take a genius. You just gotta control your emotions. Do you think backtesting daily is important? That's what I used to do. On my come up, I absolutely backtested every single day for a long time. You can ask a lot of if anyone that has a lather stack, basically, those are like my day ones, if y'all didn't know. Like Feathers, uh, Aiden. I kind of met when I was already profitable, but like AB Trades, Stunna, a lot of those people are like my day ones. And they know. Like they knew me when I was pretty much unprofitable. Used to backtest every day. Anyways, guys, I'm probably gonna end it now. Yeah, we went pretty far. Pretty long one, huh? We can start to do this, guys, every week, probably, like these streams. We can probably schedule backtesting sessions, lectures on certain concepts, and all that. Maybe some interactive streams. Promise? Yeah, I promise. Nah, for real. I'm gonna be active. You guys have seen me like these lessons I've done it all week. This is easy as fuck for me, guys. Like trade recaps are easy for me to make. Cause I don't have to make slides, bro. That's the hard thing about YouTube. Dude, it's the slides. Y'all know how long this takes, dude? Y'all don't even know. Dude, this is so annoying. First off, the slides is one thing, right? But then it's about structuring the video in like a easy to learn process and all that. That's the hardest part, by the way, like structuring it all. And then you have to, dude, it's a lot. It's a lot, and it's really annoying. But streams, streams are really easy for me. I just yap, bro. Trader caps I can do, man. Again, I'm just talking about my trade. It's not hard for me to do. So that's I can be really consistent with that. Slides, man, I'm trying, bro. I need to change something. I don't know what I gotta do. I either gotta hire somebody. Here's the thing, dude. I don't know how to hire somebody because how are they supposed to know what I'm thinking? Like, you know what I'm saying? How would I do that? Give them a rough, like, I don't know, like a sketch. I don't know, video slash over slides. Yeah, but I need to have the slides to kind of like cover the concepts first, Yeah, I don't think you can delegate it, bro. Unless someone knows, like, it's got to be like a student of mine, that knows what they're doing. Like they already know it, That's the only way. Teach us without slides. I used to do that with my old videos, but I just think they're so low quality. Like the videos are so like ass, in my opinion. It just makes the video like so much worse. Harder to learn, I feel like. I don't know. That's my opinion though. That's why I deleted my other videos. Just didn't think they were high quality. Eric can surpass everyone. Yeah, Eric's a really good student of mine. Figma real charts example. Yeah, I mean, I always go over them. My trader caps, those are real chart examples, you know. Can you please look at? Oh, all right. Here, watch this. I already went over that. Right here. This is super clean. Watch that. I am Slide Demon. You know any? Wait. You know of any good GX teachers that weren't in your mentorship and only use free stuff? I think Ferocious. He never joined. He just learned from YouTube. Who else? Who else? A lot of them were in the lens though. Like Eric was in the lens. UV was in the lens. Splash was in the lens. Trying to think. You guys know who Ali is? Ali learned from free. As well as like who else? Who else? Who is that guy? God, he has a YouTube channel, bro. Oh my god, I can't think of him. I can't think of him. No, he's not. He's not in Lathyrus. 11, yeah, 11 learned some things from me. Also done. Oh, sick, bro. You can throw that in the testimonials for you. I'll post that. That's fire, dude. Yeah, there's a lot of like good traders. I'm just naming traders that teach, basically. But yeah, there's a ton of students that have done good. AX trades, yeah. BM was in the lens, yes. He basically trades GXT. You guys will see. Most people trade GXT because it's good. What's your trade frequency on GXT model? Pretty high, like pretty high. You can trade a lot of like, yeah, pretty much every day, bro. Like that's what makes my system so, I think, so popular. That's probably one of the main reasons, because of my trade frequency. It's insanely high. You guys see Eric, bro? I used to trade like Eric, dude. Eric has like 5 trades a day. Like he's going crazy, bro. Eric's a great trader, bro. He learns. He's doing great. I used to trade like that. I used to watch the markets every day. I used to trade all 3 assets and all that. I don't really do that too much anymore. I just focus on like higher bubble stuff. But yeah, dude, like it's crazy. Like you have a ton of opportunities. Why did you switch from Eric style to not anymore? No, it's not less probable. It's just I just want to be on the charts less. The way I trade now, I literally just set alerts and just chill. And like sometimes I wake up late. Like I don't even care. Like honestly, like I wake up late or something. Like or I'll wake up in the morning. I'll just get the charts when I kind of ever feel like it. AB trades, what the fuck? How much for 101? I don't do 101. Right now, I do not do that. Where you from? USA. Oh my god, there's so many things going on. I can't even read. I can't even keep up with this, bro. When your mentorship, how many people can join? When I first started, it's gonna be a handful of people at first. I'm probably gonna end this, guys. Splash just joined. Oh, what's up, Eric? What's up, buddy? What's your plans for the day? I'm gonna play basketball, and then when I get home, probably maybe finish this YouTube video. Hopefully. Can you explain difference between trading indices? I mean, there's no difference, bro. It's just the timing of it. Like indices have 9:30 volatility every single day, so that's the time you want to focus on. Whereas um, oil and mainly no, it's really just metals. You can trade Asia like a lot. Are you a millionaire? Is that important to you, sir? I make enough money. Why so much reactions when I said visit India, please? I don't know, man. The chat's crazy. Are we the method? Yes. How do you? I'm like, how do you in your Figma slides? What font do you use? Instagram post. What font? You mean like what frame? The frame would be. I don't even know. Like, I don't even. How do you check that? Does that say somewhere here? I don't even know, bro. Yeah, no idea actually. It's right here, maybe. Anyways, let me end this, guys.